The S&P 500, the Dow 30, the Nasdaq 100. Do you know what these all have in common? They are all stock market indexes. What is an index fund? How is it made up? And why should I invest in an index? Find out why index funds are the most powerful way to build your wealth passively, and why the godfather of investing, Warren Buffett himself, says a low-cost index fund is the most sensible equity investment for the great majority of investors. First, let's look at one of the index funds, the S&P 500. This index is made up of the 500 largest publicly traded companies in the United States. An index fund, such as SPY or SPY, will try to match as close as possible to the stock funds of these 500 companies with the lowest cost. So, an investor can buy a basket of these 500 stocks all at one time by buying just one share of SPY. S&P 500. We already talked about the S&P 500, which is made up of the 500 largest publicly traded companies in the United States. The Dow 30. This index is made up of 30 large industrial stocks, and it's thought to be a good representation of the market in general. The Nasdaq 100 is made up of the 100 largest stocks in the Nasdaq Stock Exchange, which we learned about in my video, The History of the Stock Market, which you can see here. This index is generally considered to be high in technology stocks. The Russell 2000. This index is made up of 2,000 of the smaller companies in the United States stock market. Investing in an index fund is considered a passive investment. Basically, a set it and forget it type of strategy. And with the S&P 500 returning an average of 10% per year, it is a great way to make stock investing easy. It is especially useful for people that have jobs and families and not a lot of time for stock research. In fact, studies have shown that index funds will even outperform the majority of active investors. No wonder Warren Buffett himself recommends index fund investing for most people. If you find this information useful, click the like and subscribe button so we can get this information out to those who need it. An ETF is an exchange-traded fund, and it is a collection of equities or baskets of stocks that trade like a single stock. The index funds we just reviewed are ETFs. The value of ETFs is that they can be a collection of almost any financial instrument. Typically, ETFs will track an index, a sector, a commodity, bonds, or almost any other asset. They can even track a metal such as gold or silver. ETFs can give you instant diversification by allowing you to buy a collection of assets with one stock. But the true beauty of ETFs is that they can be structured toward almost any investment strategy. Are you highly focused on being environmentally conscious? Then buy the PBW ETF. The PBW fund selects companies focused on greener and renewable energy sources and technology that facilitates cleaner energy. Or do you want a steady source of dividends with very low risk? Then buy the Invesco Utility Index, RYU, that focuses on the SP 500 utility and telecommunications stocks. Stay tuned later, because at the end of this video, I'll give you my favorite ETF stocks. Next, I wanted to look at some of the negatives of ETF investing. The first negative is that ETFs have an expense ratio, which is the fee the ETF charges you to manage the fund. Vanguard is known for having some of the lowest fees in the industry. Some ETFs are small, which limits the liquidity or how easy it is to buy and sell the fund. ETFs are diversified, which means they buy some bad companies as well as good ones. One of the major advantages, in my opinion, of ETFs is that they can be structured for almost any investing strategy. Another advantage is being able to buy a collection of stocks in one purchase, instant diversification. They have lower expense ratios than equally diversified mutual funds and are easier to buy and sell. They also have index funds for true passive investment. I use 4 main tools when researching ETFs. Yahoo Finance, the fund's website, ETF.com, and ETFRC.com. Let's go over these real quick.
Hello. My name is Brad here at Dragon Financial, and today we're going to talk about some tools we use for ETFs. Okay, so the first thing we can do is we can go to our search bar here and we can type in Yahoo Finance. Okay, we type in Yahoo Finance, it'll take us to the search right away, and we can click on finance.yahoo.com. All right, and this will take us to Yahoo Finance. For those who don't know, Yahoo Finance is a free website that will allow you to look up stock symbols. For example, here we can type in Apple. We can look up Apple stock price. Yahoo Finance has a lot of free information. It's completely free to use, and a lot of traders use it for quick market updates and find information. We have market cap, we have dividends, earnings per share, and everything here. Okay, but the main thing I use Yahoo Finance for is their ETF screener. So if we come up to the search bar here and we click on ETF, you can see right here that it has the ETF screener. So if we click on the ETF screener, it will take us to Yahoo Finance's ETF screener. Now, the main tool here that I find really useful is the funds by category. So if we look up funds by category, we can see all kinds of different categories here. They have China region, they have infrastructure, large, small cap, municipal bonds, technology, options trading, utilities. So earlier today we talked about the RYU ETF. So we're going to go ahead and click on utilities, and that'll take us to the utilities. Now, right now it has selected the NASDAQ GM, but we want to look at all the exchanges. So I'm going to click off of here. So we're just looking at utility ETFs, and we'll go ahead and click Find ETFs. So now, as it's searching, it'll find the ETFs, and we'll scroll through, and here you can see we have the RYU ETF fund. So I find this is a useful way to sort by funds by different categories. Yahoo gives you so many different categories to search from. I think that's one resource you can definitely use as you start researching ETFs. And you'll notice that this search is limited to only ETFs. So you'll only find ETFs here, and you can separate them by all their different categories. Okay, so the next thing I like to do is look at the funds page directly. So if we type in RYU ETF, we can go to the funds ETF page. So this is a fund by Invesco Capital Management. So you can see immediately it brings up a chart here that's still loading. But if we go to Invesco.com, we can see the fund's actual prospectus. So every fund has a page that you can usually find on the internet, and it will give you all kinds of information about the fund. So here we see the RYU product details listed from Invesco. We see the Morningstar rating as 4 stars. We see their 30-day yield, distribution rate. And then another thing I like to look for is all of the fund details. So we scroll down and we can see all the fund's details. We can see their market value, how much money they have invested in the fund, and everything here. So I think that's very useful. Now, there is a link over here to the left, which I also like to click, which is called Fund Holdings. This will allow you to see all the holdings in the fund. So you can see that the fund's top holding is NRG, and they have 3.62% of the fund is NRG. And then they list all the other funds, or all the other stocks that the fund carries. So you can see the top stocks that the fund carries. Okay, so I think this is very useful and allows you to quickly look up the fund and get more information. The next tool I like to use is etf.com. So if we type in etf.com, we can go directly to our ETF website for etf.com. And one really cool feature I would like to highlight at etf.com is their head-to-head comparisons here. So we talked about the SPY index fund, which is the S&P 500 index fund, but that's not the only S&P 500 index funds. So if we click on this, we can go directly to a head-to-head comparison between SPY and IVV. IVV is iShares S&P 500 ETF. So if we scroll down, we can see that one is by State Street Global and one is by BlackRock. But one key area we talked about was the expense ratio. The expense ratio is how much money the fund charges you to run the fund. Okay, so with the SPY, you can see it charges a 0.09% ratio, and with BlackRock, it charges a 0.03% ratio. So BlackRock is much cheaper than the SPY fund overall. They have the same assets under management, but if you also look at this daily trading volume, you'll see that SPY has 26.7 billion. That's because SPY is used for options trading, so there's lots and lots of options tradings. It's the most common SP 500 index. So that's one of the really cool features I like at ETF.com. And our last resource we're going to look at today is the ETF Research Center. So if we go ahead and type in etfrc.com, it will take us to the ETF Research Center. And this is another really cool free website that you can use to look up your ETFs. Now they do have some paid features that you can sign up for if you would like, but one of the really cool features that I'd like to highlight here is if you go to under ETF Tools, you can see Fund Overlap. Now I think this is a really, really cool tool here. So if we go in here, we can look at the SPY that we talked about, the S&P 500 index, and the QQQ or NASDAQ index. And if we click Find Overlap, we can quickly see the funds and how they overlap. So 16.2% of SPY's holdings are also in the QQQ. So there's a 16% overlap. And with QQQ, 81% of QQQ's holdings are in the SPY index. Okay, so overall, there's the main. We can look here and see the overlap by weight, which is 37% overlap, and then you can also see the categories where it overlaps. So finance is the biggest category, 11.6% overlap, and the next is 8%. But there is very little overlap in the tech sector because the QQQ or NASDAQ is almost entirely tech stocks. So the S&P 500 doesn't have a lot of the tech stocks that are in the QQQ. You can also see the overlap by the top stocks. So if we scroll down here, we can see the top stocks that overlap are Apple, Microsoft, Amazon, Alphabet, and those are the overlaps. So the reason I like to look at this is you can, even though you're doing an ETF that gives you instant diversification, you can get overlap because Apple is going to be the top holding in many ETFs. So by holding Apple in an ETF and private stock or the individual stock, you can get a high correlation with Apple, which can it just means you're overweight in that stock. So if anything happens to Apple stock, it really affects your portfolio. So overall, those are the main tools I use when looking up ETFs. Now, this isn't a full detailed video on how to go over and use each of these tools, but I just wanted to give you a bunch of tools that you can use for free to look up ETFs. Okay, if you find this information useful, go ahead and click like and subscribe. I'm trying to bring you the best information possible, and I look forward to having you with us as we continue our journey into stocks and options trading.
This is not a comprehensive list of ETFs, but they are very solid ETFs to get you started in your investing journey, no matter what strategy you choose: index, dividend, total market, real estate, or bond. And of course, Dragon Financial favorites. My number one ETF is SCHD, which is a very well-performing dividend ETF by Charles Schwab and is a great start for any dividend investor. My second favorite is SPLG Index Fund for investors with a small account size, which will allow you to buy the S&P 500 index for under $100 a share, making it affordable for almost any investor. Wow, you learned a lot about ETFs today. My name is Brad, and I've been investing in the stock market for over 10 years. I am working hard to share my knowledge with you and help everyone become better stock traders. If you find this information useful, please like and subscribe so we can get this information out to those who need it. If you are new to investing, I have created a Basics of Finance playlist here so that you can review any of these topics. And don't forget to join us next time as we review the different types of orders and how to buy a stock.